The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, 11 o'clock till noon Eastern Time, Monday through Friday, each market day. And it's a very interesting day coming up here because we're getting back some of the gains that were made yesterday and then lost. That's very important. Thank you, Steve, for 2 great hours. And what we're looking at here is a Wednesday, having Larry Pesavento back this afternoon. That'll be great, straight after my show, noontime. And once again, got a slap in a congratulations to Larry for being away and being short. That's the S&P. That's great. Congratulations. So let's go straight to the numbers. At this particular point, you got the Dow having started off trying to rally and then failing and then going negative, but very nice comeback. I'm going to show you exactly what we're looking at in all the different areas. What I mentioned to my subscribers this morning, we're somewhat vulnerable to an upside move here because there's a chance that the volatility index, as I noted here in my overview market today section, let me just move that away, right there, that there would be a peak F if the 1620s was taken out. And we've gone to a leg B down, lowercase letters on the downside, which says that there's opportunity now for the 100, that's a 120-minute chart, and the daily it was a peak D. And here what we're looking at is that in the 120-minute chart, 1 penny above yesterday's high of 14,933.35, and you start leg D up in that 120-minute chart. This is just a retracement rally failure mode, but I must tell you, I'm looking at some things that are very impressive. So let's get through the numbers, and then I'll go through what is impressive. Here we go. The E-mini right now is up 10.5. It's a 1649. If it takes out 1650.00, that's yesterday's high, it extends this leg B. Now, the candle that we saw yesterday, there are implications with the body of this candle. But in the meantime, there's a chance, based on the rising W formation in the stochastic and the MACD attempting to turn up, that we could rally until there's a touch of that red line, which is the slow-moving average in the MACD, then we'll see. There is a downtrend line. That downtrend line comes in somewhere around 1656. So, positive action. Here's the 120-minute chart. Look at this. 120, let me get rid of that. I don't know how that popped up there. 120-minute chart made a peak from, has been in an up channel. Within the up channel, there have been arch formations, but I mentioned to my subscribers this morning, I always show the daily and the 120-minute chart of the E-minis. I don't give trades on them. It's part of the teaching of the Chapman Wave methodology. I know a lot of people use it. They like to go to it because it gives you the 24-hour, basically 24-hour trading phase of the E-mini, of the S&P future. And in this particular instance, what we're looking at is that the up channel, the sell zone, is in leg C. It hasn't got there yet, but that whole zone today, let me move it to the next period. So that will be in the next 120-minute bar. It will be from 1650.60 to the 1653.30 area. Of course, the future's trading in 25 cents, but that's the range that we're looking at. Piercing that and going into the 1654.50 area, especially if it's today, would be quite impressive. So now let's just continue with the numbers. And as we do the numbers, because it's actually quite an important session today, because it's kind of a relief rally. There's just no news is the best thing that could happen right now, and basically there's no news. So let's do this. I'll go to the Dow, and I'll just do them one at a time. The Dow has to break above yesterday's high of 14,933.35 to extend leg B. There could be a counter trend rally all the way to the 15,000 area, 15,050 to 15,150, and make a big arch formation. It's kind of What I mean, I'm expecting as a best case scenario like that. That's what I'd be interested about. I'll even put it in right now. And that would take you to 15,000, almost the 15,100 area where the 9-period exponential moving average is in the weekly chart. Could this recycle and just start a brand new buy mode? I don't think so. Not the way I'm looking at many of these weekly charts. But we'll deal with things as they come. In the meantime, what we're looking at is that the Dow has support. Now the support is really strong at the base of 14,800 to 14,750. That's going to be really strong support. At any point, if there's a slide underneath 14,700, we're looking at a completely different kettle of fish. We're looking at the 14,430s low on the left side. I think that has to wait a little bit. I think we're using up time as well as price here. So let's go on. S&P, SPX.X, that's the way I get it, has in fact broken to the upside. Let me just double check before I make that as a statement. That's leg B, 1651.35, and today is not there. 1651.14. Oh, we've got about 22 cents to go. I'm pretty sure we're going to make it, and that'll extend leg B up there. That'll be very positive. Would be closing above 1645 in the S&P. The weekly, I'm calling this a peak F top. I could turn out to be wrong, but you got the MACD, you got everything here failing. I think this is a counter-trend rally, and that's the way I'm dealing with it. Resistance, the next big resistance will be 1669.51, the high of 26th of August, and any break to the downside that takes out yesterday's low of 1633 will immediately imply there could be a test of the 1627. Break under 1627 in the next week and a half, not good at all. Okay, the weekly chart is in an up channel. I'm calling this peak F. We'll see exactly what happens by Friday, this coming Friday. Friday's close in the weekly chart. So let's go to the Qs. I'm not going to do the composite index. The Qs is really the most important. There's a soft W formation, double U, the letter U, there's the one U, there's the other U, double cup formation. So far, it's a high-level consolidation acting beautifully as it held the 9-period exponential moving average. The stochastic in the weekly is at 85%. MACD is still very good. Looks like it's trying to deflect upwards. Monthly is very strong. Why do I make such a big deal about this particular index? Yes, it has Apple, but it has other stocks as well. And those other stocks must be helping. It can't just be Apple. Apple is up right now, up 10 at 496, up 2.10. Yeah, it's helping a little bit, but it's not everything. This is saying to me there's a really good chance. This is not a positive chart formation. You get close to, you get to, or just above the previous high of 77.2728. You break above that, and then you start to pull back. That would be very negative. So I'm treating this as a counter-trend rally, trying to attempt to get to that long-legged doji, the wick of 76.72. Right now we're at 76.57. See what happens there. A break into the 78s in the next week, very positive. A break down in the next week under 75.50 says, whoa, be careful. You're going to test that 74.90 area, and that's going to be really important. Let's go on. We've got the IWM. IWM right now, just a counter-trend rally. It's one of the weakest. It's not the weakest in the weekly chart. In fact, it's one of the strongest in the weekly chart, especially even the monthly chart. And the Qs, I'd say, is a little bit better. But it's up there. But the daily chart has had a very strong, determined pullback. And the technicals are saying, if IWM, the Russell 2000 iShares, trading at 101.82, is not able to break decisively into the 103.30, 103.50 area in the next week, but instead just stalls here, it's a hint to say, be careful, because not all the little ducks are lining up. So now I want to do the VIX index. As you know, I make a big deal of the VIX. It's one of my more favored technical tools, being a fantastic help to us. Reason why I was anticipating some kind of a rally here is that you've got a peak D forming in the VIX, but it's starting to make higher highs and higher lows, just keeping it as simple as possible. And that implies that on a weekly basis, if by Friday of this week, just a couple of days' time, there is a close anywhere above the 3 weeks ago's candle, 16.56, the close above that, a close, especially if it's in the 1680 to 1710 area on Friday afternoon, that's going to say, oh, watch out, we're starting to close strongly on the weekly basis, and we hadn't seen that before in the volatility index. A break below 1508, it's at 1594 right now, would be a really sharp decline and say, hey, this market has a lot more to it than just a bounce. But I suspect we're getting close to where the VIX is going to find some kind of support. But hey, we'll deal with it as we need to deal with it. I've got it actually as a B in the, I have no other way of counting it, in the 120-minute chart. Now, the smaller time frame is really dominated by the larger time frame. So let's just watch it closely. We don't have to make any decisions right now. GLD. Let's go to the gold. The gold, the December gold, has made a potential peak F/C. So far, I have no reason why I shouldn't call it F/C. Keep it there without making a decision. Weekly chart is very strong with 1359 support. Looks to me like the weekly chart would like to get to a leg C up, and the moment it breaks above 15, whoops, I didn't say that. I said 1434 by one fraction. It's a chance that the 1470, the 200-period exponential moving average, will be the next target. Now that says go straight to the dollar. Well, the dollar's having the same sort of thing on the upside, much smaller containment area. It is in leg B, possibly peak B in the daily chart. Not a bad formation. The MACD is good. Stochastics up at 91%, and that is very strong. And that tells me that there is a relationship between the EUR-USD, which is having a bit of a rally now, and I'm suspecting that if it bounces to, it's at the 1.319 area. Let me look at this closely. Okay, so that's a nice bounce in the euro-dollar currency pair. That's saying that the next level of resistance will be 1.322 if this continues, and the stochastics at 84 in the 120-minute chart. So the dollar's pulling back a little bit. In a sense, you've got that relationship of the dollar, the counterpoint of the dollar index to the EUR-USD, even though the euro-dollar does have the dollar within it. So there is a relationship. The dollars are pulling back a little bit after a peak. What did I say it was? Oops, that was too quick. Peak D, I think it was. Dollar went to a peak B. I'm sorry, peak B. The euro is only at a trough C and trying to mount. Looks to me like the dollar's going to be the stronger of the two, and that the dollar will in fact start to take out yesterday's high of 82.52. The remaining time we've got, let's look at the TLT. Man, I tell you, this TLT is just stuck in the trading range. It's just stuck between 102, let's call it 102 and 107. It needs to break decisively above one of those two levels, and then we'll get more of a directional connotation for the euro. So I think I've covered almost everything. I haven't covered copper and oil.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And you remember, right here you have earth-breaking news. The first ones to hear it when I mentioned that Andres Nelsons was the new Boston Symphony Orchestra director. You heard it right here first. Well, on the 19th of September, there's a big bash for the BSO. Dinner and dance, but the reason why I wanted to mention it is that you've got one of the absolute fabulous singers. I don't know if you saw her on public TV the other day. Audra McDonald, what a voice, what a singer. She is just fabulous. So she's going to be involved as well in this program. It's going to be BSO Orchestra with Marcello Leninger, conductor, but also you're going to have 5-time Tony Award winner Audra McDonald with the Boston Pop Swing Orchestra. With Bo Winokur as the conductor. Bo, I used to be at the conservatory when I was doing my graduate work there in clarinet. He's a trumpet player. He has a swing band. His father had it, and he's taken over. Bo Winokur. Gee, that should be fantastic. All right, so we got that out the way, and now we want to talk about something that is going to be for you folks. You've got until noon tomorrow to sign up for something that should be exceptional, and that exceptional should be a chance to win $300 to $3,000. It is a competition It's right here using the Nadex platform. And just, you have to go to the front page. Tom gave a great class last night in explaining what it's all about in terms of how you can use this particular, how you can use the techniques involved. If you listen to, if you go to Daryl Martin a little later on in the show, that he comes in after you've got Larry Pesavento, you'll be able to really get to understand. It's a virtual trading competition you can use for free. You can get for the week. You can get something that really helps you. It's the trading platform designed by Daryl Martin. So go to the front page, check it out. It is really exciting. You've got until tomorrow at noon, 24 hours time, just over. And what's important about that is that if you're looking at learning techniques in which to be able to measure and assess your risk, and to be able to, in a different way to using options, using risk, this is just a fantastic medium. And I mentioned the other day how if you use the Chapman Wave methodology on the very short time frames, well, any time frame, but especially in the short time frames, you can do a lot to help yourself. Look at the way you could have got a nice trade on the Dow today based on just the 120-minute chart going through the 120-minute chart I showed you a little earlier, trying to go to leg C and maybe going to leg D. Leg D will be just above 14,933.35, and that should happen. So let's go right to the question I have in the den, which is, Basil, I'm preparing to take a short position in Goldman Sachs. What do you think is a good entry point? Now, this Goldman has been on my list for a long time. What I had said, when I had my live workshop, it was here in Boston, in Newton actually, way back in the beginning of the summer, I think it was in June, someone had asked me about Goldman Sachs, and I said the only way to treat Goldman Sachs, and that particular point, it was around about 160, I think it was around about 65, around 65. I said you could start a small position right now if you wanted, but the best thing is to wait for a pullback and enter expecting that Goldman could very well come back and retest the 168.20 area, which was the high at that particular time. Well, it ran up and it went to 169.69 in this cup formation. More importantly is that it's pulled back and it's held the low that was at 148.71, with a retest at 149.28, giving you peak A, B, C. Look how often this has gone to a D. Went to a D there, went to a D at 164.47 back in May, pulled back, and then still went to E and F at 168.20. Now what I'm looking at is something a little different. In the daily chart, A, B, I'm doing the troughs to the downside, C, and you got to a D and a quick E. I like the D to a quick E. And that says, yep, there could be a bounce. I have to treat it first as a bounce. Could it become something greater than that? Yes, it could. But this is what I'm looking at. I'm going to slip over to the weekly chart, and I'll explain why I'm looking at what I'm looking at. In the weekly chart of Goldman Sachs, which is trading at 156.51, up 175, first decent move it's had in quite a while. There was, oh, is that the music? That was quick. Look at this beautiful left side, right side cup pattern with a double cup at the bottom that went all the way to the most recent peak E. I'm suspecting that Goldman is in a bounce and a correct. I, too, Zip would be looking at fading Goldman on a bounce. Now let's just do the homework during the break, and I'll give you an idea of what I'd be looking at and where I would be wanting to put on a short.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians out. Now, I got to add to what I said before about this fantastic virtual trading competition, giving away $10,000 in cash prizes, Monday, September the 9th, 9 a.m. to ending Friday, September the 13th. That's why you've got to get your entry in by tomorrow at noon. People have to set this thing up. It's too late afterwards. So remember that. Hey, I forgot to mention, you also get a free den. The Den, like now, I'm pointing to the Den. You can see it if you're looking at Tiger TV. That's one thing. But the Den you can see all day. And there's just fantastic comments that have been made there, decisions made on their trading, people's trading, etc., what to look at, why they're looking at it. And, of course, you can see our charts 24 hours a day going through there. Well, mostly during the day. At night, there's some activity, but mostly during the day. So now look at this. Goldman Sachs is in the 120-minute chart, got a little buy signal to buy mode. It says that there's a real good chance that it's going to try to tackle the gap that had a low a high of 158.53 and a low of 157.75. So 158.6. I wondered how could that be a gap? 1.6. So it's about a point gap. And what we're looking at here is a good chance that that gap's going to be filled. If the gap is filled and it goes, excuse me, and the stochastic, which is 76%, actually goes to 80%, there's a chance that the candle high of 160.70 of the 26th of August and the 200 period exponential moving average of 160.47, that's going to be the stalling area. Now, I don't want to get too far ahead of this in the sense that I don't want to over-anticipate, but what I would say is that, the chances are that if ever there was an ideal place to start entering a short position in Goldman Sachs with a low risk factor, it's right there. Why? Because I would say that if it went just a point higher, 161.50 or so, I would be probably looking at tightening up the stop very much. And if it went higher than that, you can still consider that the strong resistance I would say would not be more than 2 points, but I would not give it much more. I'd give it somewhere between 159.90 and 160.50 to maybe start a small short position. I would only add to the small position on a pullback, because there could be a kind of an inverted head and shoulders here. I would want then a pullback underneath 154.70 to add to that position. And then you got to be real careful that 152 doesn't become again a bounce area. But everything about it says that Goldman Sachs should be pulling back, taking a bit of time after a fabulous move from 84 to 169, almost a double. Now here's the other thing. I want you to go in the den. Alex mentioned IBB over 200. Well, we got this IBB short at exactly the top tick. You couldn't have got it better than that. The exact top tick. At 201.47, we must have got it at 201.43. The instrument we used, the 200% short position, the instrument we used didn't get the exact low because you have to wait. It's so light in its trading that you always have to wait for the position to come to you to be filled. So there was just a couple of cents off. So what happened was it dropped to 187.05. Hey, that was a really big move, one of the biggest moves to the downside it's had. But I tightened up the stop on our position so that we're now out. One of the reasons, out with a little bit of a profit, we gave up a very nice profit. The reason is my thinking was that the IBB iShares Nasdaq Biotechnology ETF trading at 200.06, just a point and a half off the 201.47 all-time high, was vulnerable. Well, it was vulnerable, but there are a number of stops that are, how can I put it? There are a number of stocks that look highly vulnerable, but a few that still are favorites. And this is what I mentioned to subscribers, why we had to be careful. That I did say at the very bottom here in the 187, 190 area, this is the time for swing traders to take profits, but that wasn't the point. Point is that we as a position kept it on, and as a result, we took just a tiny gain. It doesn't matter. I know now that I can't say I know. I feel more sure now that this is going to be one of the sectors that comes back very sharply, comes down very sharply when it's done. It's starting to move back up now with fewer and fewer stocks. But there are some stocks that are still on fire. And what I wanted to say is, fund managers drift towards the very best of the best. You remember, stocks that make all-time highs on any excuse tend to continue to make new highs. Stocks that make new lows tend to what? They tend to continue new lows. When you go into a store, you want to look for the best of the best, and you like to get it at a bargain price. In this particular instance, I don't actually see a bargain price right now, but what's happening is that falling axe pattern that I always talk about in my CD introducing the Chapman Wave methodology, and here on air, that's when you get two trend lines. One is declining and the other is from a peak D or E or F top. and the other has sharply lower lows, but it makes an expanding wedge formation. When it breaks out to the upside, you could in fact get an expansion that takes you first of all to the previous high, that's 201.47 in the daily, but then above it. If it goes above it, I don't know if I can call it G in the weekly chart. Excuse me. In the weekly chart. But I do think that I could call it C/G with an emphasis on C, which says, hey, this is going to be, hey, don't fight this. This is looking very good. Now, here's another thing that I'm looking at. In the monthly chart, the IBB has not closed once underneath the 9-period exponential moving average since September of 2011. That's 2 years ago. Actually, I could go back even further and say since it broke out above in September of 2010, it has only closed below the 9-period moving average twice. That is incredible. That is remarkable. And what it's saying is that when we're looking at this, you've got to be a little bit careful in the sense that over-anticipating that was a great move to the downside. It's the first, what can I say? It's the second identification of a pullback that is probably going to go to a new recovery high, but it's also saying in the technicals that the technicals are getting really tired. They, in fact, are looking, I wouldn't say poor, but I would say that the technicals in the weekly chart are saying it's 77% of the stochastic. MACD is a little bit flat here. You've made your M pattern. This last move up had better see the stochastic pop right back into the 80s. Otherwise, it's going to fail very soon. Now, as I'm talking, the Dow has gone stronger. The Dow has gone to the 14,928 level, up 94. Yesterday, we actually attempted to buy the long side of the Dow. We did get in, and we got stopped out for a very tiny loss. And today, I wanted to do that, and you know, what can I say? It should have been the move, but I just felt I wanted to see it play out. I saw all the technicals, but it's one of those situations that if the Dow was at a certain point, that would look fantastic. If it was at another point on the downside, it would look terrible. And I don't like to say, oh, we could go up or we could go down. I wanted to say if we're at this particular level, that'll be very good. That'll be a good strength. More importantly, if we are looking at the VIX index, just make it simple. The volatility index declining from that peak D in the daily says some form of pullback is likely to happen here. And same thing with the Dow on the upside. So let me do two things. I had a question about Facebook. That coincides with what I want you to look at today. Facebook is at 41.85. It's slowing down its upward move. The weekly is just spectacular. From that breakout above 27, it's just soared to the 41s. At this particular point, it's a high-level consolidation. In the Facebook, social media, FB trading at 41.85, down 3 cents. This is leg B in the monthly chart. I would love to see a pullback towards the 37 to 35 area over the next 2-3 weeks, because if that happened, I would want to consider going long, because this could be a leg C to the upside, and that leg, because it's only leg B at this particular point, it needs 1 penny above 42.26 to extend it. And so far, the high of the last 2 days is 42.17. I think it will make a leg B up. What I'm saying is it should still go to C and D in the monthly charts. This is no question in my mind that Facebook, longer term, is going to go above the previous high, the all-time high, the opening high, round number, what was it? 45 round number high. Oh, I wrote it in here. 45 round number high, 17.55 low. This is a fabulous move. I think it's going to go much higher over a period of time. So we did have it. We got out early, and that's the way it is. Now, the weekly chart, I've got C/F. And I haven't got anything technically that says it even should pull back to the 37, 35 area, because it's at 95%. So this is very strong action in Facebook. Look at Amazon. Amazon pulled back very sharply from a peak D with a round number 313. I think it was the open. The high was 313.62 back in late July, early August. I think, what was that? That was July the 26th. 313.62. The next day, 313 round number high. It pulls back all the way to 279.33. At 279.33, it's just bounced, and it's bounced to 293. That's 14 points, 24 points, not 14 points. And this is leg B. And that says the candle that I'd be looking at to see if it's going to stall will be somewhere around 299 to 303. That's going to be an area. If it gets there, if it goes higher, I have to be really impressed. If it stalls, fabulous candle today, yesterday and today. Peak E in the weekly and a potential leg, a peak F in the monthly. The MACD is okay. It's not as great as it was, but it's okay. The stochastic's starting to pull back. I'm watching Amazon real closely. Something says to me that there's a digestive phase going on. This is once again where fund managers want to buy, and what do they want to buy? They want to buy the best of the best. It has been the best of the best, and they're going right back into it. Volume, I like to look at volume only in circumstances. The low was on 1.4 million. Right now, yesterday was 2.8 million, and today is already 1 million, and the day is just 2 hours, 2.25 hours old. So I'm going to be watching Amazon very closely. The 120-minute chart, I haven't finished, but it's gone to an A, a B, a C, and this is leg D. Very strong 296 resistance in the 200-period exponential moving average. Let's look at another one that that came to my eye. When you look at Google's having a very nice session as well, up 8.12 at 868. What I'm looking at is this very strong resistance at about the 8, right there, the 873 to 875 area, and it's made a peak F, a D in the daily with 928 is the all-time high, 928 all-time high, round number high. In the weekly chart, peak F, and waiting for data. What is this waiting for data? Google monthly is in a D, a peak D. But the technicals there are still very good. Technicals in the weekly are not. I'm calling this a counter-trend rally. That's all there is to it. So in looking at the scenario, what I'm looking at is that the stocks that were the absolute best have had pullbacks. They're the first ones to have a really look at MA. MasterCard, great 2 days from the 603-ish area up to 626 where it is right now. But all within the framework of a peak F top, 653 open high, 656.96 was the high, peak F, weekly's peak E, and the MasterCard monthly MA is a symbol is G/C. Could it go higher? It absolutely could. Walking the 9-period moving average, but this is actually where it is the most vulnerable. So let's go to our first caller. We've got Dan in North Reading. Hi, Dan. How are you?
Good. How you doing?
Very good. Thank you.
Well, wondering if you could take a look at VWO. I'm currently long, but wondering if I should just get out of it.
Okay, so folks, we're looking at the Vanguard Emerging Markets Fund. It's trading at 38.43. It made a peak D top of the chain. Let me just quickly explain for those of you who are new to my work, or a lot of people that are new here, and a lot of people new in the den. Let me just expand this chart. You'll see that from the doji candle low back on 3601 on the 24th of June, it ran up to the fourth highest peak. That's what we expect in the Chapman wave, 4 peaks high. Let me just double check that I did that correctly. That's A, B, C. Is that a C there? 67, 84. Yeah, peak D top, and now it's pulled back in an arch formation. It's trading at 38.43. I'll be back with Dan, and we'll look at this. It's actually not looking too bad. I'm going to be back with Dan. Dow is up 96, S&P's up 1295.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're on with Dan in North Reading, Mass, looking at VWO, Vanguard Emerging Markets Fund. Dan, I don't know what price you got in. Did you just get in recently?
Yeah, the 38.
So then you know what I'm going to recommend. There's an arch formation in the weekly chart. There's a double arch formation in the monthly. But it has made a higher low, and I like that. I'm going to make the suggestion that says you might be vulnerable to a sudden overnight gap down. But because it's at 38.45, any gap down would probably hold 37.90. If it's tomorrow. If it goes even higher, give it a point and a quarter for the gap down, like a 1%, not a 1%, about a 1.3. Yeah, I would say that it could be, so 1.37 up right now. I would not think that overnight you'd get a gap down of more than 1.50%, so 50 cents, 60 cents. I'm going to recommend you just hold onto it right now, and a part of the position should have a stop, a trading stop of about a point, which means that you've got probably a little bit of a gain. And the other one, you could put a stop right at your price right now, just to see, because this is emerging markets. Some of the emerging markets have had they've made a better base, and they are lagging, and they are trying to come back. I don't know which ones are involved here, but if that's the case, just like Ford and GM are acting so well now in that rotational aspect that I've been talking about for so long, so I'm anticipating that some parts of the markets around the world will act well, even if we continue this big consolidation that's going on. So my recommendation, yes,
if what you think of it long term, do you think eventually this is going to get back to the 34.21?
I can just tell you on a purely technical basis, the Roman candle, Chapman Wave Roman candle of June of this year. That's the one. If at any point this thing goes back and it tests 36 and closes under 36. I would say on the weekly basis, I'd say, big problem. You're going to have to wait a long time. That's the reason why I'm saying to keep the stops fairly tight, because if over the next 3 to 5 sessions, it's able to get to the 39.30 to the 39.50 area, you've got a really good cushion. There's a second H, lowercase h, that goes to an M pattern in the weekly chart. That could turn out to be pretty bullish, but those, I'm looking at levels rather than looking out and just extrapolating some data and giving you some number. I'm saying specifically up in the mid-39s, you can start to see the 40.17 9-period moving average of the monthly become an attractor, a magnet, together with the 200 period in the weekly at 41.27. But if it starts to fail, that H pattern can be deadly. So this is really an important week for VWO, which is trading at 38.44, 50 cents. So my recommendation is just to go step by step. You might find that you get stopped out of one part of your position, but the other part's holding. Suddenly the darn thing's at 39.75, but at least you've got part of your position there. You see what I'm saying?
Yeah,
but you know
I do. It's interesting that this is diverged so much from the FXI.
That's what I'm saying. It's something's going on. It includes a couple of emerging markets that are actually doing quite nicely. So hold on. Let's look at it today's Wednesday. Maybe we'll look at it again either Friday or Monday and see how it's doing. Hey, good entry point, and let's see what happens. Thank you for calling, Dan.
Okay, thanks, Basil.
My pleasure. Folks, next show up, Larry Pesavento's back. Have to congratulate Larry having gone short the E-minis before he left for quite a number of weeks, at least a month, and they certainly have been fabulous. And I have to congratulate him on their fantastic trade on Apple way back when it was in the 380s, and Apple right now is at $4.99. Okay, folks, thanks for being here. Stay tuned. Great shows. Don't forget the front page of TFNN for that big competition. My service is the opening call. Check it out, front page of TFNN. I'll be back tomorrow. Have a great day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.